When I tell you that all the big players, I've had this contentious conversation with at some point over the last bunch of years, which is you should be buying in places like Austin and Nashville. And now all the markets practically that we're in that you can't get that 5.5 yield easily anymore. You should be buying in Denver. You should be buying in the DC suburbs. There are places that you can't get your 6 yield back when it was a 6 yield, but they're getting outsized appreciation. And they all said the same thing, like literally appreciation you can't count on, which the translation of that is that they're scared to put their neck on the line, banking on future appreciation because they just don't have a reliable way to predict it. So I think that's going to become contagious. Small investors don't think in terms of appreciation. They think in terms of cash flow. So if I can buy a $300,000 house and I can make, $2,200 or $2,000 a month minus my expenses, I'm getting $1,400 a month. That sounds great, right? They're not looking at it like, well, how does that compare to my ROI and my mutual fund? They're not. The announcement came out this morning that I saw, maybe it was prior to that, but I saw it today. There's a $3 trillion infrastructure package going through Congress right now that is going to cause them that they're paying for it, quote unquote, by jacking up the corporate taxes again to 28%. Now, this stock market run that we've been on for the last few years had a lot to do with the fact that corporations got a big tax decrease and they were investing their money and they were hiring people and they were doing more R&D because they were going to keep more. That should cause some shockwaves in the stock market, I would think. I had already pulled my money out based upon this announcement coming at some point. Well, it came today. That causes people to say the stock market run is over, pull the money out. What can I do with it now? And all the news on housing is people are still moving to the burbs. They're still working remote. All those trends that were COVID driven are staying in place in some form or fashion. And so I think you're going to see more and more investors where they didn't have $500,000 to put into real estate yesterday, but they had $500,000 in the stock market. It's going to come out now and they're not going to be happy with 1% in the savings account. So you're going to see more people, I promise you, you're going to see more people that have more cash to invest than they had before because they're going to give up on the stock market for now. Right? As soon as it corrects.
That's not to mention the rent price appreciation as well.
Right.
On top of the home price appreciation,
Right. You come in buying what is essentially a 3% yield and 2 years later you're at 5%.
Right.
Right. Because the prices have gone like this and the rents are going like that, but they're trailing. Always happens that way.
Yep.
All right. So we're in great shape. And we have chosen a product that is the finest product for generating wealth that exists in the world. It's just hard for people because they don't know how to buy it. They don't know how to evaluate it. They're scared of maintenance and repairs. And we're the ones that can literally say, you don't have to worry about those things because we'll help you make the decision, find the property, make the decision, manage the tenant, collect the rents, and then maintain it. So we can make investing in single family homes as much like the stock market as it can possibly be, right? Which is just a hands-off experience. I have renewed excitement and energy around this because of all the reasons I just gave you, that the market is piping hot and it's moving even further in our direction as the stock market the bed, which is going to happen sometime in the next 60 days. We'll see a 500-point correction. They just spent $2 trillion and they're going to spend $3 trillion more. So every economist is saying we're going to get inflation based on this. And real estate tracks with inflation. So it's a hedge against inflation. Your dollar becomes less valuable unless it's in real estate.